Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. As we can see, the Australian dollar continues to seek lower as the US dollar improves, as speculation of a possible Federal Reserve rate hike is back in the window for 2026. Ongoing geopolitical uncertainty has also supported the greenback, while hawkish RBA meeting minutes pointing to another potential rate increase in August has failed to support the Aussie. Also, we've got coming up is the FOMC minutes, and also on Friday, all eyes will be on the swearing in of Kevin Walsh as the new Federal Reserve during a special White House ceremony administered by President Donald Trump. So as I mentioned, the technicals, well, they are looking bearish. And as we can see here, downside risk could play towards 70.70, which is only 30 points away. And a break there may trigger it back to the lows where close, not a Marubozu candle, but due to the wick, but very much to a very strong bullish candle. Reassess from the lows either at 70.70 or around 70 cents. The euro also displaying a weaker play, as we can see here, back in the lows last seen in March, as market continues to price in more hawkish Federal Reserves amid renewed inflation concerns tied to elevated oil prices and, of course, the Iran conflict. Traders are increasingly positioning for another Fed rate cut this year, while the European Central Bank is expected to tighten policy further, although softer Eurozone growth continues to cap bullish momentum. Turning to the technicals, they are bearish. And as you can see here, we've got a very strong ADX. So therefore, I feel that as this pattern plays out, we could see a move to 115.65 or break. That leaves the base close to around 115 figure and reassess from there. A familiar story is unfolding once again as the Japanese yen remains under pressure against the US dollar, with dollar yen trading near multi-month highs amid broad greenback strength. However, warning signs are emerging as heightening speculation that Japan's Ministry of Finance could again step back into the market if volatility accelerates further. I am neutral, but as I mentioned and have done many times, as the bulls continue to take this pattern, it can be wiped out by one candle, as we can see here, or these three candles here. So it gives little sense in why would you be pushing it this high if you feel the market could get wiped out in one day. Moving on to sterling, well, that engulfing candle was not confirmed, as we didn't get a break above the level of 134.65.75, but instead, weakness coming back into play. The MACD is also breaking down, and also the RSI we can see here is under the midway point. If this pattern continues, then these gains will be erased and look back towards the bottom side around 132.80 and reassess. Finishing up with commodities, well, as you can see here, the market is weighing on the downside and back to the levels seen early April, as markets remain concerned about inflationary impact of the Iran conflict and the prospects of higher global interest rates. Strong inflation readings and elevated energy prices continued to support a hawkish central bank outlook, while rising bond yields and a firmer US dollar has continued to see this pattern break down again. The trend is negative. Let's see how we play. I do see support close to around 4,400, but I'm still playing a neutral stance as this market is just way too volatile. Finishing up with oil, the market is still maintaining above 100. But again, as we see from this doji candle, the market could easily drop back towards the lows of $90. But like I said with gold, I'd rather keep out and just monitor the movements with the technicals. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoy a great start to the day.